Everybody, and welcome to the Institute for the Study of Muslim Civilizations. I can see some places that I've not seen before, so a special welcome to those of you for whom it's your first visit here. And it's a great pleasure this evening to welcome Dr. Scott Morrison, who's going to talk on, it's a rather lengthy title, so I actually wrote it down, Islamic Banking and Finance, well, that's simple and straightforward, a novel and increasingly significant expression of Islamic law and faith. So I really am looking forward to hearing what it encompasses. Scott has did his PhD at the University of Columbia, where his supervisor was, in fact, an APU trustee, Professor Lisa Anderson, also known to others as President of AUC. And that was in the field of Arabic, modern political thought, but has since shifted into the field of law and has been teaching at Oxford, at the University of Middlesex in the School of Law, and is just about to move to Oxford Brookes University as reader in law. So, Scott, I won't repeat the title, but I'll invite you to talk.
Thank you very much for that kind introduction. And if you don't mind, I will stand. I have quite a loud voice as well, so I think you'll be able to hear me, but if you can't, please raise your hand and let me know. And similarly, if I'm rattling on too quickly or turn out if I'm going too slowly, you can let me know that as well. So, as David said, I'm Scott Morrison, delighted to be here with you this evening. As I prepared for the slides and the lecture for tonight, I had to make some suppositions about my audience, and my assumption is that probably many of you are not lawyers. So if I'm proven wrong, then this may not be very challenging for you, but my assumption is that people may have some interest in Islamic law and Islamic studies more broadly in an interdisciplinary way. And in order to perhaps capture some of your interest, I wanted to run through some of the key rules and principles behind Islamic finance and banking as it is conducted in the modern world. So in an anthropological fashion, I'd like to start by saying a little bit more about where I'm coming from and where I got interested in this subject matter. So as David said, I started out in politics and Middle East studies and Arab political thought. I became interested in Muslim societies in 1995 in Indonesia. I was visiting my brother who was working there, and then started studying Arabic at Columbia, continued in Yemen and Morocco. So 1997, that was a halcyon era in Yemen, certainly appears that way looking back from the state of play today. Turkey was a year on a Fulbright grant, and I was doing research in Istanbul. And then, interestingly, in the Maldives, I first met businessmen who were frustrated because they couldn't bank in a manner compliant with their religion. For political reasons, this was not available to them. Conventional banking was, but Islamic finance and banking were not. So really, through these acquaintances, I became interested and sympathetic with the idea that you should be able to conduct your economic and financial affairs in a manner consistent with your religion, and Islamic law has quite a bit to say about that. That interest continued when I was teaching in Abu Dhabi and Dubai in the UAE. So I was teaching at Zayed University, all-women's university at that time, and then also at the Diplomatic Academy for Ministry of Foreign Affairs officers in Abu Dhabi. As many of you may know, Dubai was one of the two main starting points for Islamic finance in the 1970s and 1980s. Also for family reasons, so my wife is Indian. I spent a year in India, Muslim minority society, but substantial Muslim population in India, and then more recently have been on shorter trips to Oman and Brunei. So an encounter with these Muslim societies has brought me into contact with the personal meaning behind Islamic banking and finance and why people care about it. So it is an expression of faith, and I am interested in, as someone who's interested in religious studies and Islamic studies, but also what can we learn about it? What does it teach us about how the status quo operates? So is it a corrective to the conventional financial system? What can it tell us about the impact of debt, unintended consequences of debt and interest-based lending? It is increasingly commercially important, not only in Muslim majority societies, but in Muslim minority societies like the United Kingdom. So a lot of the recent writings that I've done actually deal with the legal infrastructure here in Britain and things like prospectus regulations, securities, capital markets, sukuk. I'll come back to my recent book on the law of sukuk at the end, but I will pass it around right now.
Thank you.
You don't have to read all of it this evening, but we can discuss it together at the end of the talk. This talk is going to be not about capital markets, not about any of the sort of huge success stories, which I would say sukuk is in the context of Islamic finance and banking, although it's very small relative to the bond market. It's much more this evening about retail services. So thinking about how an individual, a consumer, someone like ourselves, could bank in a manner consistent with Islamic legal principles. So my talk has 3 parts, and I'll be introducing you to the core doctrine. I realize I may be in the way.
No, it's okay.
Second part is applying these principles to a hypothetical consumer named Dimitri. So we'll ask, what does Dimitri need to do in his financial economic affairs? It's very much the same things that we all have to do. So we'll see, what does he have to do if he wants to conduct his affairs in a manner consistent with Islamic law? How would he do it? What are the legal structures of those contracts and transactions? And then thirdly, a caveat about the practice of Islamic banking and finance and its costs. So many times the products here in the UK are not competitive because of costs, and I will examine some reasons why that is the case. It's sometimes stated as a criticism of Islamic law, and in particular Shari'a compliant banking and finance, that it is prohibition driven. So I agree with that assessment. I don't agree with the negative valence attached to it. So law by its nature does provide rules and constraints, restrictions. First one that we start with, of course, is haram goods and services should not be traded. So we all know alcohol is forbidden, intoxicants are forbidden, and so forth. So yes, prohibition-driven certainly. The other side of that is rule of law. So rule of law is not only about restriction, it can also be about freedom, because everything that is not expressly prohibited is permitted. So in a way, Islamic legal history predates the English legal history and its development of the idea of the rule of law. So I have a famous quotation from Entick and Carrington, so famous public law case from England. If it is law, it will be found in our books. If it is not to be found there, it is not law. So in other words, the law is there. Anything that is not proscribed by the law is permitted. The law is public, and it must be known. So both generating freedom, even as it imposes restrictions. So very basic level, what are the main hallmarks or rules behind Islamic banking and finance? Control, although not elimination, of gharar and maisir. So I'll describe and define what both of those are, and an interdiction on riba. So I will describe what riba means and what the interdiction of it means. So gharar, uncertainty. Life is risky, so you can't ban risk, but you can curtail what you understand to be excessive risk. The express meaning of gharar is that sale contracts for future or unascertained goods are void. So there are a couple of exceptions to that rule, but the principle is, if you don't know what you're buying or selling, or what you want to buy or sell doesn't exist yet, you cannot complete that sale. It's void, ab initio. So that's an express implication of this first restriction. Secondly, maisir, games of chance. So in pre-Islamic Arabia, a game that's like drawing lots in order to determine who gets the largest part of an animal. We could think in the modern context about betting at a casino, betting on racehorses, card games, roulette wheels, all of these things involve Maser, speculation, games of chance. So, of course, if we try to prohibit risk and uncertainty and speculation, we essentially will be frozen economically. Business is risky. Trade is risky. They're all uncertain. They're all speculative. That's why I say it's a matter of restricting the level of uncertainty and speculation, not of interdicting it. The key workaround, if you want to look at it that way, to these restrictions is the introduction of an asset. So if you are buying and selling goods, you are not trafficking in Maser or Shari'a. So profits or losses from trading an asset or investing in a business venture, while they may be risky and uncertain, and they may be speculative, they are exempt from control. So any of you familiar with hadith traditions on commerce and trading know this is a central facet of Islamic historical tradition as well as law. So emphasis on contracting, emphasis on the virtues of wealth acquisition and buying and selling and labor. So riba, interdicted rather than controlled. We needed a single word in English for this. We would say usury. Now the English word usury can have different meanings. It can mean any interest, or it can mean extortionate or usurious rates of interest, meaning a high interest rate. In Islamic law, it means charging, so demanding, or paying interest of any amount. A lot of ink has been spilled on the topic of riba, so to distill it, there are two types that have been identified by Muslim jurists. First type, and I'll explain each of these with examples, credit riba. So that is when there is a change in the payment date in exchange for a change in price. Now, I realize that sounds somewhat abstract, so as I say, I will go through that in an example. Second type, surplus trading. So that would be when you have commodities of the same type, and they are different grades, and they are traded. Or that is when you have specifically named commodities, the buying and selling, or trading of which rather, is not permitted. So gold and silver are among the 7 ribawi commodities. There's a debate how widely those need to be generalized and how specific they are. Riba appears in the Quran in 4 chapters, and it appears in about 10 or 20 hadith. As I say, there's much more written about it, though, by jurists. And I've written a comparison of the English legal treatment of money and ascribing a time value to money with the Islamic legal understanding of that. And in this draft paper, I outline the foundational authorities in Islamic law, both Quran and hadith, and look selectively at some of the writings in fiqh. So, first type of riba, just to give you an example, remember that was credit riba. So, 2 parties to a sale contract, unimaginatively named Mr. A and Mr. B. So A sells B 1 widget. Don't ask me what a widget is. Some good. A sells B 1 widget for £5 cash on delivery today. A sells B 1 widget for £4 for delivery in 90 days. A sells B 1 widget for £7 90 days after delivery. So this is credit riba because a change in the payment date is made in exchange for a change in the amount of the payment that is made. So another way of putting that would be if you pay in advance, you get a discount. If it's a credit sale, then you have to pay more. Second type of riba, surplus riba. So here, same parties, A and B. This time, they're trading a commodity. They're trading oil. A trades B, so it's a swap or an exchange. No money changing hands. A trades B 2 liters of low-grade oil in exchange for 1 liter of high-grade oil. So there's no price calculation, there's just a swap. You might ask, what is the reason for this interdiction? What would be wrong with 2 consenting adults agreeing to this swap? And here I cite a hadith. So Bilal brought the Prophet Muhammad a high grade of date, Barney dates. Bilal explained that he traded 2 units of inferior dates for this 1 unit, a sa, of Barney dates. And the Prophet said, this is riba. And continued, if you want to buy a superior kind of dates, sell the inferior dates for money. And then buy the superior kind of dates with that money. So insisting upon money as the means of exchange. Now, this hadith doesn't explain the reason. In my paper, I suggest possible explanations which also draw upon behavioral modern economic theory. One explanation would be that exploitation is possible if you don't reduce it to a money price. There may be an asymmetry of knowledge, so a professional day trader will know more and will be able to exploit ignorance. If you have an open market, price transparency, the price is known. Less likely that a party is going to be exploited. So applying the 2 types of riba to the modern context. First type, credit riba. Now we're just talking about money, not widgets. So Mr. A loans Mr. B £10 today, demanding £12 in 30 days. Or, to make it a little bit more familiar perhaps, £200,000 for £220,000 in 20 years. So that might be lent under a mortgage agreement. Both of those transactions would be interdicted and blocked by the rule against riba. There is no ban on loans as such, so a loan is completely compliant with Islamic law, but it cannot be at interest. So that's not a commercial loan, that is a philanthropic loan, and that is one of the uses of loans in Islamic history and law. Second type of riba, surplus riba, already suggested, referring to that hadith about the dates, purpose of interdicting this type of exchange is reducing informational asymmetry and consequent exploitation. So in my comments today, I'm essentially now setting surplus riba aside. It doesn't have many implications for modern retail financial transactions compliant with Shari'a or Islamic law. So we're focusing on credit riba. Just a word introducing you to the structure of Islamic commercial law. So as I mentioned earlier, there's a great deal of emphasis on both contracting and on the reduction of contracts to writing. Also the use of oral evidence from witnesses. The traditional contract in Islamic law is the contract of sale. And from the contract of sale, all of the other paradigmatic contracts like lease, gift, guarantee, pledge are deduced. So you start with a sale, and then you modify that contract and add to it, and you spin out of it other commercial contracts upon which Islamic law relies. Great deal of parallels between agency law. You may be familiar with the wakil, an agent in Islamic law, and English law of agency. So essentially, anything you can do yourself, you can do through an agent. So wakala contracts, wakil contracts with a wakil for investment purposes, very common. Also, as you may know, there's no historical recognition of a joint stock company or a limited company, limited by shares or guarantee in Islamic law. It's latterly been adopted. But the classic business organization in Islamic legal tradition is the partnership. So a joint venture, or a general partnership, or a limited partnership. So you could have a sleeping partner. The partners contribute capital or labor or both. Also, you may be familiar with the waqf. So the Islamic trust is the closest thing that we have to an English trust. Waqf has to have a charitable purpose. It doesn't have to only have a charitable purpose. It can act as a private settlement, but it must also have a charitable purpose, for example, the maintenance of a mosque. So, as you may realize, that you may already know, interest and credit, and interest-based credit, is essentially the lifeblood of the modern economy. So it tells you just how challenging or daunting this project is to try to introduce Islamic principles into the modern financial architecture and landscape in which we all live and breathe. So businesses and governments constantly borrowing money from each other at interest, and banks borrow from each other, they borrow from customers, and they borrow from the Bank of England. So borrowing at interest, it's never for free, always at interest, pervasive. Consumers also are bathing in debt. So consumer loans, including student loans, credit cards, secured loans, I mentioned a mortgage, secured lending for housing, for the matrimonial home, the family home, interest-bearing bank accounts. So interest is the lifeblood of the modern economy. It's everywhere. So I say this after having told you key interdiction in Islamic law is against riba, or usury, or for shorthand, interest, demanding or paying interest. So to apply these three basic principles to retail contracts and the financial life of a hypothetical person living in modern-day Britain, whose name is Dimitri. So I'll give you a few facts about Dimitri. He lives here in London. He is married, and he has 2.6 children. So I don't know what happened to that partial child, some sort of law of averages. He is an accountant. His employer pays him a monthly salary. He has bills. I'm sorry to say, he has utility bills, he has food bills, he has to support the family. He tries to save money for emergencies. It's difficult. Sometimes he has to borrow, particularly when it's time to pay the school fees. He may need to take a loan. He also needs a place to live. He and his family need a place to live, so he buys a flat. He also has to get to work, and he's driving to work, so he wants to insure his car. So that's a legal requirement that you have to have insurance for your car. And he's fortunate also to have a workplace pension. To distill his financial needs, we see that he needs somewhere to put his salary. So he needs a bank account. He's not keeping it under the mattress. He needs debit and credit cards to pay. So he needs ways to pay his bills. He needs financing to buy the house, so he can't buy it outright. He needs help to buy the flat. He occasionally is in need of a consumer lending facility. He needs insurance for the car, and he needs to be thinking about retirement. So he needs to be thinking about a pension. He needs to be thinking about investing his savings during his working years for after he retires. So if we take two possible assumptions in succession. First assumption is Dimitri's religion and beliefs did not impact his economic life. So that means that he can have as many interest-bearing savings accounts, demand notice accounts, any bank, that's absolutely fine. So he can jump at the best offer that is out there, switch to his heart's content between banks. He can apply for as many credit cards as he can get. He can get an overdraft. He can have bridge loans, consumer loans, great stuff, no restrictions. He can get a mortgage for his flat, and he can go to any insurer. So many insurance companies competing for Dimitri's business. In terms of his pension and retirement and his savings and earning a return on these, he can invest anywhere in the retail investor universe, mutual funds, exchange-traded funds, active passive funds, commodities. There's no restriction on the companies he can buy shares in. He can buy any bonds, which are interest-bearing, of course. That's the first assumption. one picture of Dimitri's economic life. Second assumption is if he wants to live in a manner consistent with the Islamic faith or with his own ethical beliefs. So there is interest among ethical investors and others who are not Muslim in Sharia compliant finance and banking because of the principles behind it. So principle of risk and loss sharing, basic sense of fairness, that you shouldn't be able to earn a return without incurring risk, corporate governance benefits of partnerships. These values are attractive, and that attraction is not limited to people of any particular religious stripe. So the question that we seek to answer in the second part of the talk is, can Dimitri observe the financial or the foundational principles that we set out in the first part of the talk while living in a manner compliant with his religion? So as you see, the economic ends under assumption 1 and assumption 2 are the same. So what he needs to accomplish is the same. It's just he has a different set of, the ends are the same, economic ends are the same, but the means are different under assumptions 1 and 2. So before we run over each of these 6, just to restate them, what are the ends of Dimitri's economic life under assumption number 2, that he wants to live in a manner compliant with his religion, consonant with principles of Islamic commercial law? Number 1, place to put the salary, ways to pay, financing to buy the house, borrowing for school fees, insurance for the car, and pension and investing for retirement. So these are the 6 things that Dimitri wants to do. How can he do them in a manner that controls gharar and maisar and interdicts riba? So number 1, bank accounts, and number 2, payments. Types of bank account. So a demand account and a notice account. In terms of the demand account, a current account, there are Islamic legal products that do not earn interest. The legal theory behind those bank accounts is distinct from the English law regarding bank accounts, but the function is the same. So it is not a legal requirement under any banking act in the UK that a bank must offer interest. And as we know, in an era of low interest, many banks have not paid certainly generous interest, if any interest at all. So in effect, many of us have been doing Sharia compliant banking for some time now when we haven't earned interest. The Islamic legal theories are based on a deposit account or on a safeguarding contract. So amana is meaning to safeguard. That would be analogous to a bailment relationship in English law. So a bailment relationship would be, for example, if your watch stopped working and you took it to a watchmaker or watch repairer and you left it at the shop, you're the bailor, the watchmaker is the bailee. You've not given them a gift of the watch, you've not transferred title in the watch to the watchmaker or repairer. They're holding it effectively on trust for you, and they have to return it to you. Unless, of course, you don't pay the repair bill, then they can place a lien on your watch. But that's bailment in English law. Amana and safeguarding is the Islamic legal principle that makes it possible to have a current account. Another tension at the level of the jurisprudence is, in English law, a bank account is formed by a contract. It's founded in contract between the banker or the bank and the customer. So if you have a balance in your bank account, that is a debt that the bank owes you on demand. If you have an overdraft, the situation reverses. You now have a debt to the bank. So it's understood in terms of a contractual debt. Now, as I said, nothing wrong with loans and debts in Islamic law, provided they don't result in interest being charged or paid. There's also an intersection here and some sort of sticky problems that emerged when the first Islamic banks were started in Britain. So Islamic Bank of Britain was the first. There was a lot of dancing to and fro in the 1990s with the financial authorities here in the UK about lender of last resort provisions and also about deposit insurance. So as an EU and UK legal requirement, current accounts have to be insured up to a certain amount. That is not at odds in any way with the Islamic law on the subject. Second type of bank account, a notice account, so a fixed deposit. Well, obviously not compliant because it's earning interest. So Dimitri couldn't get a fixed deposit. He could get a demand or current account with a conventional bank. In terms of investment accounts, key principle in Islamic law, there cannot be a capital guarantee. So if you're investing money, you may lose that money. If you're investing it and you have no risk, you have a capital guarantee, and that doesn't comply with Islamic principles. You're not investing in a manner compliant with the rule or the spirit of Islamic law. Some sort of gray areas where there are investment accounts that are Sharia compliant, and they might smooth profits. So if there's a month where the returns are lower than expected, they might pay out an amount that they had put in a reserve account on a previous occasion where the expected profits were exceeded. So some debate about that, whether that is fully compliant. It certainly is a market practice. And then for investment accounts, there are additional UK compliance costs to operating here and being a deposit-taking institution. So as soon as you are offering yourself to the public and opening yourself out to deposits, you're subject to a UK regulatory regime. So place to put the salary, how to pay for things. So ways to pay. Very little conflict here. So any way that you want to pay, listed here. You can pay cash, fully compliant, checks, personal banks, banker's drafts, postal orders, etc. Bank transfers, direct debits, no issues. Debit cards, credit cards, PayPal, you could pay in Bitcoin, no problem with that. Virtual wallets, blockchain, etc. All of these methods of payment, if that's what you're using it for, are fully compliant. You can't speculate on these things, but you could use them as a form of payment, as a means of payment. Unless you pay your credit card in full every month, naturally you incur interest, so that wouldn't be allowed. Overdraft is a commercial interest-bearing loan, so you couldn't have an overdraft. So those are the ways to bank, so where to put the salary and how to pay for things. Second thing, or third item, buying the flat, so financing for the family home. Perhaps he's going to buy a flat like one of these. So in conventional terms, the principal legal device for home financing is a secured loan. Usually that is a mortgage. So that is where the bank has a proprietary interest in the real property, so in the interest in land. The bank's risk is minimized because they have that property. If you default, they can take that property. Mortgages are usually done at a fixed or variable interest rate and for an agreed term, and the bank has the ability to take possession. So actually, under mortgage agreements, normally the bank has title in the property as soon as the ink is dry on the agreement. They waive the right to possession. Wouldn't be much good to you if you bought a flat and couldn't live in it. But effectively, the bank is the owner under a mortgage agreement. If Dimitri sought to take a mortgage to buy the flat, then he would be a borrower and the bank would be a lender. So not an option. So ribawi. Islamic alternative, the mortgage or home purchase plan. Different legal analyses are possible, and these may be used in combination. So you could have a partnership. The bank and Dimitri are partners. So it's like a joint venture buying this interest in land. They divide the property into shares, and they buy and sell those shares. Initially from the third party, and then from each other. Second legal analysis would be the bank or banker as the landlord and Dmitry as the tenant in a buy and lease back transaction. Could also be understood as a hire purchase agreement. So a hire purchase agreement is a lease followed by an option to buy. Purpose of the Islamic home purchase plans is to avoid the interdiction on riba and to avoid the characterization of the parties as a lender or as a borrower. So, example of Islamic home mortgage plan, Dmitry has identified a flat. Probably isn't going to get the flat that I had in that picture for £200,000, but let's keep the math simple. The bank and Dmitry agree a rental amount for Dmitry and his family to possess the flat. Excuse me. The bank pays the £200,000, purchases the flat, and as in a conventional mortgage, waives possession. So Dmitry and his family can live there. They take possession of the house. Over the next years, Dmitry pays the bank $12,000 per year. That's $10,000 towards the $200,000 plus the agreed rent of $2,000 per annum. So buying back the shares and paying rent. In 20 years, the full amount has been paid plus the rental amount that was agreed. And the bank transfers title to Dmitry. If you add up those numbers, you see that the bank makes a £40,000 profit on a £200,000 investment. So just to keep it simple and schematic, Dmitry gets the flat. It economically functions in the same way as a mortgage or a loan at interest without circumventing or violating the rule against riba. So economic function, identical, loan at interest. What keeps it compliant is the presence of the asset. So as I said at the beginning, buying and selling assets, in this case an interest in land, makes it a lawful transaction. You're not trading in money, you're not trading in debt, you're trading in land, trading in tangible property or usufruct. So shelter is usufruct. It's a legal right that you can buy and sell. Not paying interest, not paying a loan. So he has the flat, now going to buy the car. We've talked about a secured loan. Now let's talk about an unsecured loan. So for a smaller amount, a consumer loan might be provided by a bank. If they're not concerned about Shari'a, it's very much like a credit card or overdraft. It's not based on a proprietary interest. It's a contractual interest. So if you don't pay back the debt, you can be sued in court. But the bank doesn't have title to any of your property. They can sue you for breach of contract. They can sue on the debt. Cars depreciate quite rapidly. As soon as you've driven it off the lot, I understand it drops by about 15% right there on day one. So cars depreciate very rapidly. Banks are not that interested in securing loans against a depreciating asset like a car. So they might not want that security interest. They just want a contract under which they can sue to enforce their rights. And they may charge a higher interest rate for the risk that they're running. So let's say that this is the car that Dmitry and his family have selected. It is a VW Touran. And the bank, to do this in a Sharia compliant manner, will buy the car, let's say, for £23,000. The bank and Dmitry agree that there will be a markup. So just as if you were buying and selling wholesale versus retail. The bank here acting as a trader rather than a financier or lender. So they agree a markup of £5,000. Bank is acting as a trader, not as a lender. Dmitry pays the bank £500 each month for 56 months. And at the end of that period, title in the car passes to Dmitry. Economic effect, again, same as if you were issuing an unsecured loan or a credit sale. However, the presence of the asset, the turan, means that you're not reaching the interdiction against riba. You're not buying and selling money, you're buying and selling the car. Trading not money for money, but for a tangible asset with an agreed markup, very much like a profit that a trader selling retail would make. Fifth issue, insuring the car. So conventional insurance, how does it work? So you may know this, in case you don't. Quite simply, the insurer undertakes to pay the insured if an uncertain and adverse event takes place. So you cannot insure against a good thing happening. You cannot insure against the risk that you will win the lottery. However, an employer might insure against the risk that his employees will win the lottery, because usually when employees win lotteries, they quit. So that's a risk for the employer. Also, the event must be uncertain. Life insurance doesn't operate on this basis. We all know we're going to die. So it's not an uncertain event. Depending upon how you look at it, it may or may not be adverse. But it isn't covered on an indemnity-based insurance policy. So we're not talking about that. We're just talking about adverse event. What kind of adverse events happen when you're in vehicles? Sometimes there's a collision. So sadly, there was an accident, frontal collision, the VW Touran, property damage. Don't worry, Dimitri's okay. No personal injury, but property damage. Fortunately, he could buy insurance. If he wanted to buy conventional insurance, then we'd have to throw out assumption number 2. He's not insuring in a manner compliant with his religion. Why is that? So an insurer effectively is engaged in a game of chance. An insurer is playing the numbers. So they have the actuaries crunching the numbers to know what's the probability that X, Y, and Z adverse events are going to happen. And let's speculate on that, and we can make a profit on that. That's essentially how indemnity-based insurance works. It's like placing bets on the probabilities that bad things will or will not happen. So this isn't riba, but it clearly is gharar and mesar. So it is uncertain and it's speculative, like a game of chance. The substitute to that is based on kafal, the Islamic legal contract of guarantee. So takaful is Islamic insurance. It removes the profit element, so it functions as a cooperative plan for the dispersal of risk. The insureds, the people buying the policies, in effect, offer a guarantee to one another. So they undertake the risk. They spread the liability of the adverse event happening, diminishing the risk for any one individual, pooling their money in order to do this. It's not a for-profit enterprise. They pay into a fund, and if the adverse event happens, then they have a claim on that fund. If at the end of the agreed period, so it could be a year, proceeds, if there are any left, are divided among the insureds. Now obviously you need someone to run this, so you could pay for a fund manager or an administrative fee to run the takaful scheme. Sixth and last, saving and investing and pensions. So a number of things, as I say, in the very wide investment universe that Dimitri can't do, can't invest in, can't get interest-bearing bank accounts, can't buy bonds or other debentures. So a debenture is a document that evidences a debt. Can't buy shares of companies that are trading in haram goods and services. Derivatives are detached from the real economy, so they're essentially speculative. Binary trading, forex, other than at spot, wouldn't be compliant. Spread betting, contracts for differences, if you know what these things are, they wouldn't be allowed. Lottery tickets obviously aren't allowed. They're not a very good pension plan in any case. Those are the exclusions. So what are the inclusions? What asset classes could Dimitri purchase when thinking about retirement? Screened equities. So I think the spirit of Islamic law is already clear that it doesn't discourage risk-taking if it is in an entrepreneurial enterprise, so if it's starting a trading company. So you could buy shares in a company that is not buying and selling haram goods and services. So that will cut down on some of the most profitable stocks. It may cut down not only on things like tobacco and alcohol, but also hospitality, if they are serving alcohol in their hotels. Of course, you can put equities together in a fund, a variety of different types of funds that you could buy. You could invest, buy to let, invest in the family home. Commercial property funds, you can buy and sell commodities, no problem with that. Valuable use for diversification. Gold, silver, oil, LNG, etc. funds comprised of these things, no conflict there. Might buy, if you're a collector, if you have a collecting frame of mind, you could not invest in wine, but you could invest in fine art or jewelry or coins or rare books, so specific goods. Of course, the problem with this is none of these produce risk-free returns. So you can lose all your money. Anyone know who that is? Anyone recognize that picture?
Shakespeare.
Yes, thank you. William Shakespeare. Famous line from one of his plays, "Neither a borrower nor a lender be," from Hamlet, Act 1, Scene 3. Nicely encompasses Islamic banking and finance. So you see in those transactions we worked through, there's no borrowers and there's no lenders. And you could understand the entire enterprise as a way of avoiding those legal characterizations and substituting for them landlord, tenant, buyer, seller, partner, limited partner, general partner, etc. So conclusion, and I will wrap up quickly so that we have enough time for questions. We went through these 3 subjects. We see that Dimitri can, on assumption number 2, in a manner compliant with his faith, get paid and pay his money into a bank account, save it, pay bills as a way to pay, can buy a flat and a car, can insure them, can also invest for the future. Caveat is, it will cost him. So it's more expensive. It's not that competitive. The caveat is that there are some limitations. So there are higher institutional costs. Under English law, you only need to have 1 board in a bank. Under Islamic law, the way it's been implemented in the modern world, you will have 2 boards because you will have a Shari'a board as well. Shari'a scholars are costly. There's not that many of them. There's not that many who are well known. It's a reputation-driven industry. So you've got to get some of them who are the most famous if you want to do a big deal and if you want to found a successful bank. Also, there are additional legal compliance costs and taxes. So in ijara, sukuk, for example, that is a lease. It's a sale and leaseback arrangement. You think about buying a property, renting it, selling it, 3 different transactions. Each of those attracts stamp duty, land tax. That's expensive. So in the case of an ijara sukuk, they've been exempted by the UK tax law from SDLT. But there are many other examples in Islamic financial transactions as they're practiced in the contemporary UK, where it's more expensive because it's more complex. Instead of doing something in 2 steps, you have to do it in 3 in order to comply and in order to avoid riba. Islamic financial institutions generally are conservative. They're not highly leveraged. That means they're less profitable. There's less scope for speculation unanchored to assets. There's only so many assets. Difficult often to find an asset in order to finance, for example, a sukuk. There are some reasons for optimism and progress globally. I won't go into many of them right now. If you'd like to ask me about those, I'm happy to elaborate on that. And I haven't talked about my book, but it's here. And it is about sukuk, which is sometimes called an Islamic bond. But as you understand from my presentation today, that is not precisely accurate. So it might be better glossed an Islamic investment certificate. I've mentioned an ijara sukuk, so that ijara just is a lease. you can structure this capital market instrument around a lease. So I also have some flyers regarding this book, which Sweet and Maxwell published in June, so fairly recent publication, mainly targeting practitioners and solicitors in the City of London who are structuring these deals and transactions. These are available, and then I also have a review of the book that has come out. I have founded an Islamic financial consultancy called Idrak Limited, and I'm happy to talk to anyone about this afterwards. The purpose of this company is to bridge Islamic legal authorities and the marketplace, so the industry, and in order to disseminate training and knowledge about Islamic commercial law and finance that is predicated upon it. So I hope, if I've managed to do anything tonight, I've managed to show that it is not an abstruse, arcane, necessarily convoluted or complex area of law. It has perhaps 3 essential principles. When we understand those principles, we can begin to formulate contracts and ways of doing things compliant with Sharia. These are just some recent publications. I'm writing a lot about not only sukuk and securities regulation relating to them, but also the impact of Brexit and how it may actually have a beneficial impact on Islamic finance and banking in Britain. So thank you very much for your attention and for listening, and happy to open the floor to questions.
Thank you very much for that very clear exposition. So we've got about half an hour or so for questions, and so I think people can expand a little bit on their points of view. I'll have to cut people short if they go too far, but let's, who would like to ask the first question?
Firstly, apologies, I came in late, so I may have missed this. You may have already covered. So my question is, why? What's your interest in Islamic finance, Islamic banking? What draws you to this?
So thank you for that question. So really, personal relationships and meeting people. So when I was living in Maldives, for example, had friends who are businessmen, and they were very unhappy with the fact that they were forced essentially to have interest-bearing bank accounts or loans politically at that time, although Maldives, according to the constitution, is an Islamic state or inspired by the principles of Shari'a. It was not available to them. That is a very small market. That's a country of 300,000 people spread across 200 islands, so there's other reasons for it. But really, it was my understanding of how you might want to live in a way which is compliant with your faith, and that might be meaningful to you as a person. And it might be very frustrating if you can't do that. I think that the British government has done quite a bit, actually, to facilitate this. So I mentioned tax reform, so exempting sukuk from SDLT, for example. The negotiations with the Islamic Bank of Britain, which is now Masraf al-Rayan Bank. It's actually really promoted retail Islamic financial services, and one of the justifications for that is social inclusion. So number of Muslims in the UK, not that large, 5 or 6% of the population altogether, but British government, I think, has been wise in seeing that this is a way to include more people and say there's not any sort of expectation you have to bank in a manner you're not comfortable with.
But is this something you believe in?
So I find principles admirable in this. I think even in the contemporary literature about debt and the impact of debt, I think in some ways Islamic law was prescient in observing some of these things. In the article that I had on screen about characteristics of money in English and Islamic law, I look at how behavioral economics today has made some similar observations. So if you have a credit card and you know you can pay later, somehow in your mind, it's called future discounting. You're more willing to spend money. So you become reckless. I think many of the problems that we see today are a product of easy credit and lending. I don't think you can do away with it completely, but I think it's instructive to see how a legal system developed without interest, and how can we apply that today.
Can I ask? Okay. Can I ask a question? First, is wadi'a or amana equivalent to current account in the bank? Did I get that
Yes,
correct?
yes, provided.
Wadi'a or amana
Yes,
is
that's
equivalent
right.
to what we call current account.
That's exactly right. So
Okay.
provided it isn't interest bearing, it would be consistent.
Okay. Another thing, as I've understood, if I want to buy your mobile,
Yeah,
and if I pay you cash now,
yeah,
you give me for 1,000, for example.
yeah,
If I'm going to pay you for 6 months, it's for, let's say, 1,010
yeah,
or 1,100, 1,100.
right.
Is this riba?
No, so that's called.
Yes. Okay, this is because I did not get that correctly. Is this way of buying and selling
Right.
instantly for certain amount of money, and if the time expands, I have to pay more? Is that put under the title riba?
No, it's not. So those are very precise and pointed and important questions. It's very much like the financier, let's say, is working as a trader and they buy at wholesale and then they're selling it to you. Transparency is important, so they need to tell you this is the wholesale, this is the retail, this is what we're selling it to you for. So that's called profit and loss sharing, and that would be completely compliant.
Okay, thank you very much.
Sure. Sorry, there's a question at the back, and then I'll come to you. Yeah, thank you. See if you...
Thank you for a very clear presentation. I think that probably what is most compelling to a lot of people outside of the Islamic faith is especially the risk sharing question. And I was wondering if you could expand a little bit on that, especially in relation to, you mentioned briefly the rise of Islamic banking in the 90s and 2000s, and what happened around the credit crisis, and if there were any discourses, because what happened, especially with the mortgage crisis in the United States, was very much about lending without taking a risk or without being part in the risk, sort of unresponsible lending, and whether that is discussed in these circles of Islamic finance.
Okay, that's great. You've asked a number of really important, cogent questions. So let me try to address them in the order that you asked them in. You asked about the profit and loss sharing. So certainly from a doctrinal and normative standpoint, there's a great deal of emphasis, both in Islamic legal traditions and in the contemporary industry, on profit and loss sharing. So the problem with that is everyone wants a risk-free return. So everyone is always trying to find a way to either minimize the risk or reduce it to zero. So that's the attraction of a bond. I mean, it isn't actually zero risk, but it's very low risk. So what you see when you look at the global industry, which is essentially, in terms of thought leadership, it's centered in Kuala Lumpur, Malaysia. So in terms of volume and sukuk issuances, Malaysia is actually the biggest player. Until very recently they were, in any case. And Manama, Bahrain, second center, AAO-IFI. And they have publications and standards that they're coming out with all of the time. And what you see is this dialectic. So you see Shari'a scholars promoting profit and loss sharing and saying investors must take more risk. People must not insist on this capital guarantee. And then there's the marketplace. And they keep making this demand because that's what everyone wants. So there's this tension which has been played out, sometimes fruitfully, sometimes destructively, over the last 20 or 30 years. There will never be any final resolution to that, but it has led to some creative and innovative methods of financing. You asked about the origins of it in the 70s and 80s. So one of the main impetuses for Islamic finance and banking actually was the oil boom in the 1970s. So when you have the GCC states, huge influx of cash because of energy prices. They had historically and still today are very present in the conventional bond market, and many of their banking systems are purely conventional. But beginning with Dubai Islamic Bank, there was an interest to create Sharia compliant financing. Different story in Malaysia, wasn't based on oil wealth, but since the 1980s, Malaysian government has been firmly behind Islamic banking and finance, and they've promoted it. last point you made about the 2007-2008 economic crisis, or economic crisis commencing in those years, there's been a lot of research on the respected impact of the last major economic crisis on conventional banks and Islamic banks, and their respective importance with respect to causation. So some scholars say because of the emphasis on engagement in the real economy, the low leverage, the risk-averse approach of Islamic finance institutions, they weathered the storm better and they contributed less. So they weren't involved with CDOs, they weren't involved in mortgage crises and non-performing debts in the United States. I'm not sure that that's a completely compelling case, but it's an argument that is made that the principles of Islamic finance tend to be more stable and tend to weather these crises better. There are plausible explanations why that would be the case. So if you tie it to economic assets, you don't reach the heights of speculation that you do if you can conduct things in a conventional manner.
Thank you very much for your lecture. I do have two questions. The first one regarding purchasing a mobile phone for 1,000 if you want to pay cash, 1,100 if you pay in installment or after later on. The finance company is not the seller in this scenario. So there are two companies now, which means you are getting interest, £100 extra when you are selling the mobile phone.
Can I answer that first?
Yes.
So that's a really important point. The bank, though, so it's acting as a bank, but in this transaction, it is acting as a seller. So it buys the phone from a third party. Now it owns the phone. So now it can sell the phone. It has title in the phone, it can sell it.
When you purchase a car, you never own the bank, never own the car, never have the title of ownership of this car.
Not in a conventional transaction, but that is a requirement, and you see why it's a requirement clearly for Islamic law. The customer selects the car or gives the specifications of the car they want, the bank buys the car and then sells it to them.
Yeah, but in this scenario in the UK, they never purchase the car. The bank never purchases it.
Yeah, so then it isn't compliant.
Exactly.
Yeah.
Number two, I worked in 2004 as a solicitor, and what I noticed, just to go around Islamic banking, I noticed that they asked the purchaser when he wants to buy a flat, for example, they asked him to sign 7 documents, in which I realized the bank doesn't have any risk at all. And he asked him to purchase life insurance, he asked him to purchase many things, which increase hugely the amount of which he should pay if he goes for normal bank.
Yeah.
As you suggested, how come I consider this is Islamic banking if it's connected to the Bank of England, which means the interest, they only the Islamic banking, they just add the Islamic board fees on top of that, which is every 6 months they just reconsider it.
Yeah.
According to the Islamic Bank of England.
Yeah.
So I believe this is just a cheating, honestly.
Yeah. Yeah. So you wouldn't be the first to have said that, and I think those are really important points that you've made. For the transaction, the sale of the car or the sale of the phone, for it to be compliant, the bank has to be the owner of it. So that's the Islamic legal requirement. Whether that is honored more in the breach or in practice is another question. You've suggested it isn't honored. The selling of other products, the multiplication of contracts, that has nothing to do with Islamic law. So that's simply an opportunity that a contemporary Islamic financial institution is seeing. I would say that Islamic financial institutions are especially vulnerable to that because they are reputationally driven. So if banks are doing things that are either non-compliant or questionable, it certainly damages the industry. But the industry or the Islamic law is not making them do that. The marketplace is demanding it, or the companies themselves are doing it. And on the last point, I wanted to say something else. I'm trying to remember. You talked about the complexity, so there's a lot of workarounds. There's a lot of sort of artificiality in a sense of the contracts. That's a criticism that you often hear, that it's legal form without substance. So I would resist that to some degree, because even when I pointed out the economic characterizations are identical, the legal characterization also matters. So even when you have a sukuk which is functioning as a conventional bond does, economic function is the same. it can be legally distinct. And what we're concerned with is following the law and applying the law. So even when you achieve the same things, you often hear people say, these products are mimicking conventional products. I don't take that as a criticism, I take that as a description, because you're trying to apply the law. If you are able to achieve the same economic result, which in many cases is a very necessary, essential result, you have to do so. But I think you made a number of important points, and we could talk at much more length about that.
Okay, so first of all, we've got a couple of questions online, and then we'll come back.
Okay, first question. Many credit cards offer rewards such as cashback or travel rewards, etc. At least they do in the US and Canada. Thus, if one pays off a credit card in full every month, the cardholder is actually receiving money back. Any thoughts or considerations given to such practices in Islamic law?
Yeah, so
There are two questions online. You take both of them.
Okay, second one is shorter. Can equity fund be converted into sukuk?
okay, so I'll just take the second one first. Equity funds, provided they were screened. So as I said, you couldn't buy shares in companies that are trading in haram goods and services, but you could buy shares in companies that are not, and then you could certainly buy these in a fund. As far as the first question, so yes, you do see Islamic banks offering gifts or other rewards for banking with them or using a credit card. There are differences in different jurisdictions on how these Islamic principles are applied. I would say that that at least falls into the category of not complying with the spirit. And depending on the particulars of what they're offering, it may not comply with the letter of the law either. We need more information about the particular deal or promotional that we're talking about.
Thanks. So now we've got a question back, and then we have a couple of questions here, and then there. So, yeah, okay, please.
Thank you, Professor Morrison. Excellent presentation. If you allow me to introduce myself, I'm the founder of Islamic Bank of Britain. I'm also the first CEO of Islamic Window of any British bank in the world. I do sit on the IFQ Islamic Finance Qualification Board, and I'm also the founding member of Bank of England Working Party that changed the UK's constitution for Islamic finance on the double stamp duty.
Maybe you should have been up here instead of me.
The reason I'm sorry to say that, the reason I introduced myself, because I'm just going to respond, if you allow me to, those 2 points that
please,
raised. The first point he raised was on the possession. Once there is a legal contract that's been signed between the seller and the buyer, in this case the bank, we call it a constructive possession. Then the holder of the constructive possession can easily either sell it or lease it onward. So that's perfectly all right. So I know this term is not very commonly known here, but in certain asset classes that is used. Your second point on the LIBOR and SIBOR and WIBOR and whatever we call it, as a benchmark, we are using the conventional benchmark, but that is only as a reference point. That does not mean that the transaction gets invalidated just because using a benchmark, because I mean ideally there should be an Islamic benchmark, but unfortunately until now the Islamic benchmark has not been established. So until that happens, for the sake of transparency, we have to use a benchmark that people can really verify and see whether the bank is transacting in a fair and transparent manner. And if I could go back to your presentation on, I think it was page 29 or 31, where you mentioned about the mortgage. In fact, I was involved in offering the Murabha and the Ijara Vector mortgages back in 97, 98.
Right.
So, I mean, you have comprehensively covered, but there's one point I would like to add.
Okay.
The customer does not have to wait for 20 years or 10 years or for the life of that Ijara Vector contract, which is basically a financial lease.
Right.
There is a rent review every year, and at that stage, the customer can buy the units, any number of units from the bank, and there is no penalty in case if they want to settle that or later.
Okay, so I'm grateful for that clarification, and you've actually reminded me of something else I wanted to mention to you, which may be news to many people in this room. I certainly appreciate the point about Bank of England, and if Islamic banks are banking with the Bank of England, prima facie then they're trafficking in interest. So there's been a consultation which concluded in April of this year with the Bank of England, and they are going to open a Sharia compliant credit facility. So that's a further step that the British government and the Bank of England wants to make to allow banks to meet their liquidity needs without resorting to interest.
I'm sorry for my English, but in your opinion, is the future will be for the Islamic finance or the Islamic banking? And there's a small note. You used the garar.
Yeah.
I think the correct word تغرير. Yes.
غرر.
It's تغرير, not غرار.
Okay.
No, there in Arabic. I think the correct word تغرير.
I think we may have to agree to disagree on that one, but I'll crack out the dictionary when I get home.
And what you wrote, wadi'a, in Arabic,
yeah.
it's wadi'a, which is wrong. It should be wadi'a, with D. Yeah, in Arabic, dal,
No,
exactly. But
dal,
you
not
do it with dal,
Ah, okay.
which
That
is
may be
different,
Yeah,
absolutely
right.
different, completely different.
typographical error. Thank you.
I think there's somebody at the back.
Hi. The question I've got is to do with the current UK corporations. They don't actually, by and large, qualify for sukuk because their memorandum and articles are somehow restrictive. Is that something that would be looked at by the Islamic scholars to actually open up and allow Islamic bond, for instance, to be made available to them?
So that's an interesting point. Now, my understanding of company law in the UK is we haven't had restrictive clauses in Memorandum of Understanding or Articles of Association for 10 or 15 years. So normally you just adopt the model articles, which make no restriction as to the type of trading that you're going to do. And in fact, the first sukuk in the UK was a corporate sukuk. It was not the sovereign sukuk in 2014. So it has been done by a UK incorporated company. There's no legal restriction to that I can see. Until recently, there may have been an unfamiliarity and a fear about sukuk. But to date, there have been 65 issuances of sukuk on the London Stock Exchange. Some of these, of course, are cross listings from other companies incorporated elsewhere. But there's no legal limitation on it that I'm aware of, and it is certainly an increasing trend since 2014 in particular.
I don't think there is, if I may add, there is any issue from the Sharia standpoint, or even from the scholars' viewpoint, so long as it does not really contravene or contradict with the major tenets of Sharia principles.
Yeah, I mean, if it's trading in pork hides and alcohol, then it's not going to be issuing a sukuk.
But again, on that note, Scott, if I may mention there's generally, if you're investing, and to protect the investor's interest, you've got to give it a grace period, and the scholars are aware of that. And I have debated with lots of scholars, over the last 20 years, and they have agreed to that. So normally there is a grace period given,
right?
That up to a maximum of 5% threshold is permissible.
Yeah.
But even that has to be thrown out, and given to the charity, out of the income of the revenue. But at the same time, then within that prescribed allowed period, that investment has to be taken away from the system. So there is some sort of flexibility.
Yeah, I think there's two really important issues there, actually. If you read a sukuk prospectus, there's always a clause in it about interest. So if the account where the funds were kept, typically by a corporate service provider, was interest-bearing, so a portion of that may be permitted, but as you just said, it has to be then donated to charity. And then there's another even larger debate, which is when companies' main business and revenues are completely compliant, but some minority portion of it is not. And there's a difference of opinion about this among scholars. So some would say you have to have a majority compliant asset. Some would say you have to have only 1/3. And they refer to different references in the Quran and Hadith on this. I don't think that it's terribly compliant if you have such a high level of non-compliant goods and services that are being financed by means of sukuk or shares. But there is a real debate. It's an excellent example of this dichotomy or this tension that I mentioned. It hasn't been solved or worked out. So you have people who want to say everything has to be completely compliant, and then others saying that's just impossible. You can't trace the supply chain back that far, so you're going to have to allow some sort of margin for non-compliant goods and services.
Yes.
My interest is particularly in microfinance. And I think for those who do not know about microfinance, it's all about providing financial services to the poor. The transactions are very, very small. Now, it took off in a big way around 1970s because of Grameen Bank or Muhammad Yunus. Now, it has expanded enormously in many countries. But what I find that all this microfinance, providing microfinance itself, is not based on Islamic finance at all. Now, there are some countries that have tried it, but they've failed. And whichever some countries that they've tried it, they have not reached scale at all, unlike which we have seen in many countries. What's your view on that?
Yeah, so as you say, it was formed and developed for reasons completely separate from Sharia compliance, and it has a lot of successes, it has some failures, it's had some reputational problems more recently. I've heard of efforts to do it in a Sharia compliant way. I don't think any of them have taken off enormously. I think that's reasons of scale, it's extra cost, it's things that I talked about in the caveat that I made at the end. So I don't really see a bright future for it. I think microfinance can be valuable for a lot of things, but when you add the Sharia compliance, it becomes more difficult.
I mean, it's the other way around. The industry is growing and growing every year. Right? I'm just letting you know.
No, but the Sharia compliant aspect of microfinance, I don't think it's growing that rapidly or at all. Thank you.
Something rather different. The underlying principles that you outlined were to be Sharia compliant, there should be a sharing of risk. So, what is jurisprudence that underlies the payment of rent? What is the sharing of risk if a landlord rents a property?
Yeah, very good question. So, ijara, that is a trite contract lease. It's essentially the same as lease in English law. So a landlord has title in the property. Title does not pass to the tenant. The tenant has a limited right to possession of the flat under the terms of the lease agreement. They have an obligation to behave in a tenant-like manner. So if they are guilty of gross negligence and the flat burns down or is flooded because of their negligence, they will be liable for it. Otherwise, the maintenance of it is the responsibility of the property owner, which is the landlord. So there's really no difference between the English law of lease and the Islamic law of lease.
Rent, what does it represent?
So consideration under a contract for that limited right to possession. It's usufruct, so paying for a right to shelter.
So in this scenario, if the property, if I purchase the property today, and the next day the property value goes down, who will bear the loss? The bank or the new owner?
So it would. We talked about the process over time that happens. So it will depend on the nature of the agreement between the bank and the customer as to when title or a majority of the title would pass. So the loss will fall pro rata depending on who owns the more shares in the house at that time. Presumably, if it's day one or day two, the bank will own more shares. So they will take more of the loss.
But in this scenario, the bank, before he purchased, let's say, the flat, he asked the tenant to have many documents, sign many contracts, which secure the risk that in the end of the day, banks doesn't have any risk. That's what I can see.
Well, you're making certain assumptions about those documents, which...
Because what I noticed, as far as I remember, because I dealt with it in 2004, there was like he must purchase life insurance, he must purchase, give undertaking that to purchase the property because bank initially purchased the property. Then undertaking to purchase the property from the bank. There are certain documents. So as far as I remember, there wasn't risk bear by the bank. Just everything just being signed to the tenants. And in the end of the day, you say, yes, bank is on the property.
So again, that would be a departure from what the law requires, not disputing that that has happened or that banks have done that. It doesn't challenge the principles of Islamic law. It just shows they're difficult to apply, and banks have cut corners. And I think that's an absolutely accurate observation.
I think for Islamic mortgage, we don't require the life insurance.
That's an instrument.
I mean, if somebody is doing it, maybe they're doing it for extra protection, but again, then that has to be under the covenant, not the convention.
There's a question here.
Just one quick question. That's very interesting what you wrote here. Thank you for our lecture. I was just thinking, especially in after a collapse of Bretton Woods, when we function in so-called no system at all, do you see any kind of solutions in Islamic law which could be transferred to international financial system, especially in terms of future markets? Because that creates enormous risk for countries, for governments, for basically for whole regions.
So that's a very challenging question. I don't think I can probably do it justice. Under Islamic law, you have a futures contract, so it's an exception to the general rule that I mentioned. So it isn't actually different from a futures contract in the conventional world. So Islamic law and Islam doesn't offer an alternative in that sense. I know there are some efforts in the literature now to say, what would Islamic central banking look like, for example, and I'm not that familiar with that literature, but it is a debate going on. How would you be a central banker and try to do this in a manner? Seems very challenging to me. How do you sort of deal with the fact you're in an interest-based international and national banking system? How do you import Islamic financial principles into that at all? So I'll just recognize the challenge that you've given me with that question and just admit I can't offer anything more than that.
We're beginning to run out of time, but there's one last question.
In conventional mortgages, you have the idea of penalties.
Yeah.
Is that looked at as in a new way? For example, if you come to a certain term, you can sell off and pro rata whoever owns the property. But if you break that agreement, does Islamic finance deal with that issue in any way?
Yeah, so absolutely, that's a great question. There's been a large debate about that. A gentleman in the back talked about the ability to pay it off early, so you could do that, and then it will depend on the agreement whether there's a penalty associated with that. Another question is late payment fees. So that's been debated for a long time. Obviously, it's problematic. I mean, on the face of it, that would be ribawi. And there are some complicated calculations that have been suggested, and there's been kind of a market convergence on not a pre-agreed penalty, but one which is based on the value of the asset at the time the breach occurred. So it has a connection with the real losses, but it's not liquidated damages, in other words. So it's actually a really interesting subject in terms of this dichotomy. How do you try to make a viable contemporary financial product without using fees, which are so essential for so many purposes?
Well, we've come to the end of our time, but first of all, I'd like to thank everybody who's here and all the many different questions, challenging questions, which I was delighted to see Scott was able to respond to. I know many of you haven't been here before. If you want to be put onto the mailing list, I think there are little cards on the table. There's an address that you can send a note to saying, could I be put on the mailing list for future events. Shakir, who was bringing the microphone around, has just had to leave, but I'd just like to say how grateful we are to him for looking after the microphone. That's Eugene for looking after the webinar and making sure that we answer questions online. So thanks very much. But of course, thanks first of all to Scott for outlining, as you say, a novel, which could be interpreted in different ways. I mean, the questions, the basic questions have been, I think, put forward, both the challenges but also the potential of Islamic finance and related questions. So again, thank you very much.
Thank you. Thank you very much.